Thank you, Maximo. Now we are open for questions. Dan?
Simple question. I was beginning to wonder how one defines infrastructure at the margin. Certain physical forms of infrastructure, roads and bridges, are obvious, but when you get over into electronics, into communication, to cell phones, it's a little different. That's more knowledge. It takes more knowledge to develop something like that. Building roads is fairly simple operation. So it's just a modest thing that I think might be added to a presentation of this sort of what it is and how you define it at the margin.
Okay, thank you. I think we should group maybe 3 or 4 questions together. Keith? Why don't you introduce yourself? Where are you from? What's your name?
I'm Keith Fugley from the USDA. I just had a question for Vivian regarding small-scale irrigation in Africa. The rates of return look pretty substantial. I'm wondering what are the constraints to the private sector investment there? What's the role for policy?
Regina?
I'm Regina Bierner from IFPRI. It's more a comment than a question, but I was wondering to which extent the Africa Infrastructure Country Diagnostic also deals with governance challenges, because in some areas of infrastructure, especially roads and irrigation, governance problems like corruption are a major constraint and increase the cost and reduce the profitability. If you take the case of small-scale irrigation, it's quite disconcerting to see that the 3 countries that have by far the largest potential, Nigeria, Niger, and Sudan, are actually exactly those countries where these kind of problems exist. And even countries that are better governed have problems. We did a case study in northern Ghana, and Ghana is certainly one of the best governed countries in the continent. And we found that in one region where we looked, less than 20% of the small reservoirs that were built were actually in the end used for irrigation, mostly because of governance issues. And the problems in large-scale irrigation are, we have very bad experience from the past. The Tono irrigation scheme in northern Ghana, for example, the cost was $40,000 per hectare because of these problems. And these problems were actually one of the reasons why the donors, after a while, also turned their back on irrigation in Africa, because they just felt that there's no way to make that work. So I think the challenge really is to find out how we can address these problems. And I was wondering whether you have any insights on that.
Yeah. So one hand in the back there.
My name is Glenn Strawn. I work in telecommunications, piggybacking on governance. I've given 2 speeches to ministers of telecommunications from Africa, one in Ghana in August, explaining the need to open up their markets. But the problem is they lose income that they are gaining by keeping a closed marketplace. Senegal, Gabon are perfect examples of institutional closures that the government is using to feed money political parties and other expenditures.
Okay, thank you. Vivienne and Maximo, why don't you begin to address these 4 questions or comments?
Okay, thanks. I also wanted to pick up a couple of the points made by Maximo, which I thought very interesting. It's interesting, you mentioned, Maximo, that you thought the global financial crisis would probably reduce construction costs. And I had exactly the same reaction. And I got into a discussion with a colleague last week who argued that a lot of this work is being done through local bidding in very collusive markets, and therefore it's sort of somehow insulated from these broader global trends. So that's an interesting thing to bear in mind, because in principle it could actually be a very beneficial effect. I also very much like your idea of the overlapping domains. In here I just went through each of the sectors. There's a lot more that could be done, as you can tell with this material. We're only just beginning to sort of pull out different types of stories from it. But I think to actually do some of the overlapping domains and use it as a means of informing development strategies and donor strategies in countries would be a very good way forward. Right now we're in the process of turning some of this material into country-level reports and trying also to feed into some of the country assistance strategy discussions. So that's very much the direction we're going in, and I think it's a promising one. On the issue of how to define infrastructure, it's always a tricky thing. Our definition is not very philosophically profound. We just decided to focus on the network industries. And even there, actually, we had a bit of an issue about whether you include just the hardware, also the services that go over the networks, like trucks and rolling stock and so on. Anyway, and you're absolutely right, though, to point out that often it's the soft aspects of the infrastructure that really bring about the economic value of that infrastructure. And that's a finding that came out very strongly. You can have a great road and then have a 30-hour wait at the border, or you can have a great road and then have a trucking company that fleeces you with a 200% profit margin. So the interaction between the hard and the soft, between the infrastructure, the physical infrastructure, and the regulatory and market framework that underpins it is very, very important. On the issue of the small-scale irrigation, I'm not too knowledgeable about what the constraints might be, but I would imagine that just access to finance would be one in the kind of countries that we're talking about. And probably issues also to do with land titling and land holdings and size of holdings and so forth. But probably other people in the room may have more insights on that. The issue of governance, yes, well, we certainly weren't able to measure it, unfortunately, through the AICD. So we don't have new insights in terms of the magnitude of it or the locations of it. What we did try to do was to invest quite a lot of effort in understanding the institutional framework in each country. We looked into about 100 different dimensions for each sector, so we got quite a rich picture of that. And we've tried to see to what extent we can actually trace performance improvements to differences in institutional frameworks. And the examples I gave there of the road funds and the rural electrification agencies are just sort of a small example of how you can do that, and how we are seeing some significant differences, maybe not as dramatic as you might hope. Maybe they are more second order relative to other factors like economic geography and so forth. But we are able to discern impacts of institutional reforms and governance in that broad sense, yes.
Yeah, so only two little things. One, you're right on this issue of the structure of the market for the inputs. I was in El Salvador, and we were evaluating the freeway, that they are building a freeway in the northern zone. And we started this evaluation when the price of petroleum was 110 the barrel. And therefore, we have to shrink the freeway, two of the segments, to be able to have enough budget. And then I came 2 years later when the price went down to 45. And still, the costs were the same, which is pretty funny because this was based on petroleum. No, a lot of the major input of the freeway is petroleum. So yes, that's something that needs to break. But with the fall that you are seeing in the last quarter in terms of industrial production, for sure, it has to change. So I'm hoping that. But on the other hand, there is also the idea of this Keynesian approach that you need to expand expenditure. So infrastructure is a productive expenditure, and that's where you can have a higher return. Now, on the governance issue, only two things. One is we did a simulation based on the USAID data on corruption in the freeways, in the roads between 3 countries. And the effect is enormous in terms of how much time, not only on how much you pay in bribes, but how much time you delay the transportation. So we compare that with what will be cost. It will cost to improve the freeway from a 1-lane to a 2-lane roads. And basically you lost all the gains in time because of the stops that you have to do to pay the bribe. So although, of course, they are not substitutes, no? But what I'm trying to say is that that's a problem. The same problem happens when you have a very nice road, but the port is not working efficiently. So if you're able to move your high-value products to the port, and then the port takes 2 days to be able to move the product out, then you are in trouble. So that's the idea of the value chain component. No?
Can we have another group of questions? Rajul?
Thank you. I'm Rajul Pandya-Loach with IFPRI. I have a question for you, Vivian, and another one for Maximo. Vivian, I was very curious when you plot out these different coverages of the different infrastructures, and you see a very different pattern, infrastructure by infrastructure across Africa. Why is there such a difference in pattern and not a concentration? You know, I would have thought that you'd have... In terms of, can you just... Yes, I beg your pardon. In terms of the road coverage, in terms of the cell phone coverage, irrigation, I would have thought... Goodness,
I want to touch it.
You know me.
I want to show you that the charts.
Yeah, okay. I was wondering what I was doing. I was curious why there was such a distinction in the patterns, and I was also curious in that light about the leapfrogging. Why it took place in the cell phone area and why we don't see it in other infrastructures. What is unique there in the regulatory environment or in other environments that doesn't translate into other infrastructures. Maximo, a question for you on the regional corridors. I was very intrigued, particularly in light of the governance question that Regina raises. In the African context, how viable is it really to go down a regional road when you have such different governance patterns and such different vested interests? Is it, from the starting to the end, is it really viable? And particularly in an environment where there are only a few countries that are kind of larger hubs or larger, have larger concentrations, is there a free rider issue over there also? Thank you.
Thank you, Raja. Any other questions? There's one in the back there.
Judy Payne, USAID. Vivian, I was interested in how you calculated the extent of the rural areas that could be served broadband service by the private sector.
Any other questions? If not, I could also add a couple of questions to Vivian and Maximo. One is, have you thought about the recent flows of large investments from Asia to Africa? China is investing $9 billion in DRC, Congo. And also they try to bring the investment to build these sort of small dam irrigation projects from Ghana, Uganda, to Angola. So that's one question. How can we use the investment from Asia, like China, India, or Japan, to improve infrastructure in Africa? You didn't mention about this sort of mutual learning in terms of implementing infrastructure projects between Asia and Africa. And this may be not necessarily related to the first one. The first one is the investment. The second one is a mutual learning, particularly at the grassroots level, on how to manage the roads and irrigation schemes. I think in Africa you do see the roads built, irrigation canals built, but after 5 or 6 years it becomes obsolete. So how can we learn from Asia? Related to governance, I think the governance obviously is very important. Maybe local institutions is equally important in financing, in managing rural infrastructure, particularly a smaller scale infrastructure. Okay?
Thank you. The issue of why the stories are so different across infrastructures, and they really are very, very different, as you say, and related to that, why ICT is so far ahead. I think really in ICT, the ICT sector benefited from an extraordinary technological change that took place, I guess, in the early 90s or a little before, in terms of the GSM technology. And the reason that was so profound was that it reduces the capital cost of rolling out the services very dramatically compared to, say, a traditional copper wired network. Because the reason that infrastructure networks in general have trouble in rolling out is just because they're very capital intensive. And typically those investments are also take a long time to pay back. And that makes them unattractive for a commercial investment. But by reducing the amount of capital needed to provide telecommunications services, and at the same time providing a type of service which has huge appeal and therefore huge willingness to pay, the mobile technology was really able to revolutionize access. Although probably if you asked people 15 years ago, they would have maybe doubted whether African households had the willingness or ability to pay for these services, but clearly they do, and that's a very dramatic finding. In fact, in some countries, we actually found that there was a higher penetration rate of cell phones than of private piped water connections, which is a pretty shocking thing to find. So by contrast, the other infrastructures we're talking about, roads, irrigation, and power, are very capital intensive, very public sector orientated, and therefore have tended to move much more slowly. The reason that power is, the reason that roads is somewhat further ahead than either power or irrigation is perhaps due to the fact that donors have tended to stress roads a lot and have provided a lot of funding for roads. Donors largely abandoned the power sector for the last 15, 20 years. There was the view that this was not a poverty-related sector, that the private investors would take care of it, and they pretty much stepped back almost completely from funding power projects in Africa. And at the same time, the national governments were not able to plan effectively for their future power needs. So the power sector is for that reason particularly far behind. Irrigation is different, and I just don't know enough about the sector to be able to explain why it is so spatially concentrated in just a handful of countries. But perhaps other people present could comment on that. Turning to the issue of the possibility of providing private sector access to broadband services in rural areas. We used, and again, this is, I'm drawing on other work of others, so I don't always know the details in great depth, but we used an assumption here that it would be very low capacity, and that therefore the service could be rolled out without without putting fiber optic networks out into the rural areas. So the technology, I believe, is known as CDMA, and provides a very low capacity broadband signal. Which is enough to support access for like public access telecenters and maybe a handful of institutional type of users, but would not provide kind of broad-based access to the service. If you use that technology, then the costs are very much lower, and that's why it starts to look relatively viable. But what a lot of African governments are talking about is actually rolling out fiber optic networks into rural areas, and that is a much more expensive proposition, and certainly wouldn't be feasible with the kinds of private investment that I suggested there. Regarding China, India, the Asian investors, funnily enough, we actually did quite a big study on this last year. It's called Building Bridges. We looked into the phenomenon of Chinese official finance for infrastructure projects in Africa, which grew from almost nowhere in the early 2000s to be round about, I think it reached about 6 billion in 2006, which was the year of Chinese Year of Africa, and it's tailed off a little bit since then, but still it's in the multi-billion level. Basically, that we're talking there about a financial flow that is comparable in order of magnitude to the ODA provided by the OECD countries. So that's really quite a big shift in the financing situation. What we found was that while Chinese investment was, or Chinese finance, official finance for infrastructure was broadly manifested in the sense more than 30 countries have Chinese-funded infrastructure projects and in a wide range of areas. If you look at where it's concentrated, we found that 2/3 of the money is going into large hydropower schemes and into railways, about 1/3 each. And in terms of countries, probably about 70% is going to 4 countries, which are Nigeria, Angola, Sudan, and Ethiopia. That was up to the end of 2007. Then there was the DRC deal that you mentioned in early 2008. But essentially, the pattern of the funding is very much following the resource-rich countries, and essentially Chinese interest in developing trading relations and FDI relations with those countries in order to provide supplies of petroleum and minerals. And in some cases, the infrastructure in hydro generation and railways is also linked to mining developments. In other cases, it's linked more broadly to national development. So I'm not actually very familiar with what Chinese and Indian investors have been doing in the ag sector, I must say. Maybe, I don't know if anyone else can comment further on that. So I'll hand it over to Maximo.
Sure. Only to respond to Rayul, how feasible it is to do these regional corridors. I think things are changing a lot in the world and in Africa and so on. And the regional agreements and the regional cooperation is increasing substantially, although that's not a solution. But the idea here for me is that you will need to think in terms of packages. So which countries should play the major role in these regional corridors? So not all the countries will have equal weight in terms of managing or the governance of the corridor, but it will depend on the countries which can really move this faster and so on and so forward. So there is a lot of work to do to be able to figure out the governance structure to do that, but I really don't see the problem, especially if you want to increase regional trade, which is one of the most important issues that will happen now with the problem around the world. On the leapfrogging, One of the reasons I think the success of the cellular phones is because of the lack of incumbent fixed phone telephone companies in Africa, but I don't know. That's a hypothesis. But it is also linked to the current strength of the cellular companies in these regions, in the sense that with the technology we have now, we don't need cellular companies anymore. We can use IP telephony, which is basically for free and doesn't consume band from the WiMAX, the wireless band, or the fiber optics band. So there is a lot of barriers that we need to start to break to be able to bring these new technologies, which will make it a lot more affordable around the world.
Okay, I think it's almost the time to conclude. IFPRI has been working on rural infrastructures for the last 10 years or so. Initially, we focused on the impact assessment, as Maximo mentioned. So we did assess the impact of rural infrastructure on growth, on poverty reduction in various countries, India, China, Vietnam, recently Cambodia. And some of that work has made some impact in various countries, particularly in India. I think right now the rural infrastructure is in their top priority, or one of the top priorities in promoting agriculture growth and rural development. In terms of financing, I remember some of the parliament members in India used IFPRI evidence to argue for this levy for diesel. So I think I forgot how much, 0.1 rupee per liter, to use that money particularly for rural infrastructure. So that the IFPRI has made some impact on that. But in terms of our future agenda, I think we still have lots of gaps to learn and to address. The first one is related to Maximo's question. So how do we prioritize, sequence various type of infrastructure investment? So you mentioned about irrigation returns, about 18% for the large scale and 26% for small scale. But compared to research, this is still very low. I mean, research is 35% on average in Africa, probably 40 to 60% in other regions. So you clearly see some priorities there. But obviously, in a particular location, how do you really look at what are the major constraints for the next step, whether it's water, or whether it's electricity, or rural roads? I think we still have quite a bit knowledge gap over there. Then in terms of financing, I think we do know infrastructure is very important. We do know infrastructure is important in terms of growth, in terms of poverty reduction. So how do we actually increase or mobilize resources to support infrastructure investment? How do we bring the private sector? I think Vivian's calculation shows that Africa needs $80 billion in irrigation. This is all coming from public sector. It's like 20 times bigger than the current agriculture spending. But that current agriculture spending is public spending. I mean, do we expect all the irrigation investment will come from the public sector? But from our experience in Asia, in fact, most of the irrigation investment comes from the private sector. Maybe initial investment will come from public sector to build the canals. But later on, it is the farmers who will put more money in irrigation. Then governance and institutions, I think that's clearly a research gap. So how do we address this? I think this is probably one of the, as I can see, one of the biggest problems in Africa at the moment, in the local level. How do we actually promote infrastructure for economic growth, for poverty reduction? Simply linking them to roads, to a market, or to irrigation probably is not the only solution. So how do we help them to maintain and to organize themselves, to invest, to manage?